Interest rates are up and the stock market's down. Foreclosures hit 181%, the highest level since March 2020. Me and my real estate wife are going to cover what we can do if you're on the foreclosure side or if you're trying to profit from
if you're an
other
investor,
people being in foreclosure, because we need those people that are going to buy those properties. And I'm going to be one of those people, hopefully. I'm planning on having 100 doors. Let's go. Woo! All right. Foreclosures surge 181%. Some 8 months after a nationwide memorandum of foreclosures expired, foreclosure filings soared to the highest level since the pandemic began. There's an 8-month lag since the memorandum stopped. And it seems like maybe the inflation's hampering people. You know, food prices are picking up. Everything's doubled that I buy. Last month, 33,333. That's a lot of threes. Properties across the U.S. faced foreclosure. 29% pop from February. Now, this is interesting. The first quarter saw 78,271 properties with a foreclosure filing, a 39% from the previous quarter, and 132% from last year. So it's more than doubled.
Yeah.
And it's starting to pick up. The stock market's going down. I mean, interest rates are up. I mean, we are in the descent, it looks like.
Yeah, and my heart breaks for some of those people. So hopefully we can offer some solutions. But keep going.
The figures represent the highest number of foreclosures since March 2020, when nearly 47,000 U.S. homes held foreclosure filings. Not only did foreclosure activity hit peak, the time it took properties to foreclose ticked down 3%. Okay, this is what you need to know. Properties foreclosed on in the first quarter were in the process for an average of 917 days. So we're talking 3 years.
It takes a while. Foreclosures take a long time.
Is that when the deals get here in 3 years? Are we going to have to wait that long?
Well, foreclosures take a long time because you have to go through the process. They have to have so many months of where you don't pay. We'll talk about solutions after this, but it does. Foreclosures can take a long time. And you have to evict them. And
I'm going to touch on California because it always happens there first. They're number one. The highest number of foreclosure starts for the first 3 months is 5,378. Florida takes second place with 4,707, and Texas is at 4,649. Now, that's strange. California, Florida, and Texas. You got one crazy liberal state, and then you got two of the most conservative states, and they're second and third.
But that's
is it because California moved?
Well, people have been moving to Florida and Texas a lot. So what I've noticed in real estate for the last, I guess, 12, 15 years, that what happens in California, pretty much where we live in Louisiana, you can just about bet we're 6 months to a year behind California. So I really try to watch California trends, and you people that are out there in different areas, you need to figure out what your trends are. And that's what we've kind of watched. We're like, all right, California's here, so we know in about 6 months to a year it's going to hit us. And so we start bracing and preparing for it. So we see this in California right now. And we're already
now you're seeing it in Florida and Texas too.
Florida and Texas.
That's what's interesting to me about this article
Yeah.
is it because California people are moving to Florida and Texas?
I don't
and they
know.
bought a house they couldn't afford?
Could be. And they can't now, they don't have a job.
So that's interesting. California is what we call a cyclical market.
It is.
It's like does really good and it does really bad. Where we live is kind of linear. Natural gas usually pulls us through these hard times, and oil. But take it for what it's worth. Now, I'd like to talk about what we can do. If you're on one side, if you're on the bad side of things, what can we do? And
Solutions.
if you're waiting for deals, what can you do?
I love it. So let's talk about solutions first if you're the homeowner.
Okay.
So if you're the homeowner, one of the things I would do, first thing, is I'd pick up the phone and I'd call your bank. Call your lender.
They'll work a deal with you?
Just try to see if they will if they will refinance. Right now, they'll sometimes refinance for a lower interest rate or a longer loan. You might pay more for the house, but at least you're not kicked out. So I would at least just call them. They will also say, all right, we will give you so many months you don't have to pay. Now, here's the kicker on that. sometimes they will accumulate the interest. So when you do go to pay that note, you're going to have to pay all that interest that you didn't pay. So make sure and look at the fine print. But first thing, if I was a homeowner, I would definitely call my lender.
Yeah, the banks aren't usually going to lose.
No,
They're not known for that.
They're not. No, that's what I would do. And then if you're upside down completely and you're like, I just cannot afford these payments, I would reach out to your local real estate agents, family, friends that knows investors, because you can do what's called a short sell. A short sell is actually a joke. Well, it's a joke on words because it's not short. It takes a little bit of time. But you call your lender and you're like, hey, I'm upside down in this house. You have to prove it. You have to provide all this paperwork. But you can say, I need to sell this house. What will you guys take to get out of this house? What is your bottom dollar that you will take? And that's how we've actually gotten a house or two of ours.
So on a short sale, how long does that take compared to a foreclosure? We're talking 2 to 3 years on a foreclosure. What is a short sale?
Usually about 3 months.
Okay, so
Yeah.
you've got time.
You do. And that gives you an opportunity to say, and it does not go against your credit score. Because a foreclosure goes against your credit score, and then you end up not being able to buy for a little
Super
while.
important, guys. You
It
want
is.
good credit in
It
the
is.
Thunderdome.
It is. So if you're upside down right now, if you're one of those people that are struggling with payments, I would so recommend calling your bank, asking for a short sale. If you cannot keep your house, if you cannot work something out, and call an investor, call somebody like us. There's people out there that want to buy houses and will work with you, and you can get a
Yeah, sure. I don't plan on buying any houses.
Well, we're not right now.
Not right now. I think
Unless
it's going
it's
to
a
get
really good deal.
worse before it gets any better. But there's always investors. There's always people that
There are.
invest. There's people buying houses all the time.
There are.
So now let's flip it over to investors. What should we be doing? I've got some videos on this. The very first thing you should do, I'm going to put right here. I made a video about it. It's called Fill Out a Financial Statement, See What You're Worth, and then you'll know what to do. Watch that video. So after the financial statement, you know what you're worth and you got a grip on things. What's the next step?
You have got to create relationships with lenders, with banks. If you don't create relationships with lenders, you're dead in the water. You don't have an option. That has
Unless
been
you
one
got
of our
cash, of course.
well, cash. All right, you're
I
right.
like using
cash.
other people's money.
But if we prefer using the lender's money and not bringing any money to the closing table. So you've got to create relationships with lenders.
So-
I like it to when I walk in, they know my name. I don't even have to provide my account number. They're
Go
like,
straight
hey,
to the
Stacey.
president. Go to the vice president. Act like you are worth $10 billion and just go in there and say, hey, this is what I'm going to do. I'm going to buy rental properties. I'm going to be successful at it. This is my plan. And this is how I'm going to do it. This is what I'm worth. You hand them your financial statement.
Yep.
What you're worth, liabilities minus your assets minus your liabilities. And he's going to go, oh, okay. All right. And he'll know. It's like, all right, let's go. Let's do it. Even if you're not planning on buying right now, right?
Oh, I completely agree. Oh, I just have to tell you a really awesome story. So I got a call today from one of the subscribers that watches Chris, and they actually took the advice and did a financial statement. And she called me today, and she was so excited because she did the financial statement. She realized that she had a little bit more money than she thought she did. So she called me to buy gold and silver. And because she did the financial statement, hi, Sandy, if you're listening, she realized that some stuff had been paid off that she didn't even know about because she logged in to find the account balance to do for the financial statement. She did the happiest dance in her life, and she called me. So she said, I wouldn't have known. She said, if you had you not told me to do a financial statement, she said, I never would have known this, and I thought I owed like $68,000, and I'm debt free.
And that's how you figure out how much precious
Yes.
metals to hold too.
Yes.
People ask me all the time, how much do I need to buy? How much are you worth? 10 or 50% of that.
Yes.
10% up to 50%.
Yes.
That's why I tell everybody, I'm not going to tell you what I do because you might do it. That'd be wrong. So,
Well, I say create a financial statement, and you got to have a lender, and then just start looking at your market. Look at where your market. So I look at other markets around the area. And if you don't have a real estate agent, find a real estate agent that will help you. Start looking in other
that's a
areas.
good relationship
It
to
is.
have.
It is. Start looking at other markets. So I start seeing, what is your trend? What are you doing here? What are your markets going down? And then I start looking at ours.
I'll give you a tip. Catch them before they go to foreclosure.
Yes.
That
Or
is
auction.
Sweet. That's where you pick them up sweet.
Yeah.
And you're doing them a favor. I mean, they're ready to go. The house is wrecked. There's plenty of value add there. And you can see the grass growing up in the yard. And that's another video. But
No, that's a short sale. That's what we're trying to say, a short sale. Because you can help the buyer or the seller, where they don't go against their credit score, so they don't get a ding on their credit. They can turn around and buy again, because if they go to foreclosure, it goes on their credit score, unfortunately.
All right, what's the last thing?
That's pretty much it. As a seller, you want to try to get out as soon as you can and not get a ding on your credit score. And as an investor, you want to try to get it as a short sell.
Build those relationships,
Yes.
get that paper going, have it ready. Start watching content that trains you how to do this
Look
stuff.
at trends.
Because I think the biggest buying opportunity of a lifetime is coming. We don't know if it's 6 months from now, 3 years, 5 years. Who cares? You'll be ready. You'll have all your stuff
Yep.
ready, and pow, let's go.
Yep. Start looking at trends. You've got to look at trends. Yeah, you've got to have somebody that will help you look at trends. I look at trends every day on my website.
And that's it.
That's it.
Thanks, guys. I appreciate you watching me and commenting. Have an awesome, awesome day. Later.